Something big is happening with YYAI, and I think a lot of investors are missing what's really going on. The stock has just hit another fresh low, and that's got a lot of eyes turning toward it again. Some people are saying this is the bottom, the perfect setup for a bounce, while others think there's still more downside ahead. But the truth might be somewhere in between. Because when you actually dig into the filings, the data, and what real investors are saying, you start to see a pattern forming. So don't skip this one. Give me the next few minutes, and I'll show you what's behind the price action, what the market might be missing, and what could happen next. Let's start with what most of the community is already talking about: dilution. This is probably the biggest red flag for anyone watching YYAI right now. A lot of investors have pointed out that the company has issued new shares several times. That means every time they raise money, it slightly reduces the value of everyone's holdings. Think of it this way: the company isn't suddenly worth more. There are just more pieces of the same pie. Each share becomes a smaller fraction of ownership. The recent reverse split was supposed to fix that issue, to make the share count more manageable and attract new investors, but instead, it seems to have shaken confidence even more. If this continues, any recovery could be slow and fragile, especially if daily volume remains inconsistent. When trading volume drops, even a small sell order can drag the price down fast. Now, the second big issue that keeps coming up is listing compliance. This is where things start getting serious. Exchanges like the NYSE don't like to see stocks trading under $1 for long. If the price stays below that level for too many sessions, the company gets a notice of non-compliance. That doesn't mean an automatic delisting, but it does mean management is under pressure to act. They could try another reverse split, restructure their funding, or release strong updates to bring attention back. But until something happens, uncertainty grows, and that uncertainty alone can push investors away. The third area that stands out is the company's identity crisis. And I don't use that term lightly. YYAI has been connected to everything from AI matchmaking to sports collectibles and even some crypto ventures. That's a strange mix, and it sends mixed signals to the market. Investors like focus. They want to know what a company does, what its main source of income is, and how it plans to grow. But when a company keeps pivoting from one industry to another, it becomes nearly impossible to value it correctly. You can't model predictable earnings when the business model keeps changing. Frequent pivots might seem like innovation on paper, but in practice, it creates confusion, and confusion leads to low confidence. Then we have the communication gap, and honestly, this might be the biggest silent killer here. Many investors say the company doesn't provide enough updates. They want to hear from leadership, not every few months, but consistently. Investors need to know what's being built, how much progress is being made, and what the next steps are. When companies stay quiet, rumors take over, and rumors move faster than facts. That's when you start seeing social media speculation, message board panic, and emotional trading, all of which lead to massive volatility. When traders can't trust what's real and what's not, they either stay out or they trade based purely on hype, which is never a good foundation. There are also ongoing discussions about a possible earnings release in December and a rumored new exchange-related product. But right now, that's all unconfirmed. Until the company releases an official statement with concrete numbers, revenue details, or product launch info, it's all speculation. If a solid announcement comes, it could help rebuild momentum, even temporarily, but investors need something tangible to hold on to. Hope alone won't move the stock for long. On the other hand, there's another cloud hanging over the story: legal chatter. I've seen mentions of class action discussions and shareholder frustration posts. Nothing official has been filed, but even the mention of potential legal trouble can have an impact. It creates a perception problem. Investors don't want to be caught in a situation where uncertainty turns into risk, and risk turns into losses. Whether it's real or not, the talk alone can make people hesitate to buy. Liquidity is another practical but very real problem. When there are wide bid-ask spreads and low volume, it means even small trades can swing the price sharply. That makes the market unpredictable. Imagine placing a buy order and suddenly the price jumps 5 or 10% because there just weren't enough sellers. Or worse, trying to sell and seeing the price drop instantly. That's what thin liquidity does. It magnifies moves and discourages new volume, creating a cycle that keeps volatility high. And yes, some people are still talking about a potential short squeeze, but let's be real. Without a clear catalyst, it's unlikely. A short squeeze only happens when there's real pressure, usually from a major piece of news, a big product launch, or an unexpected earnings surprise. Without that, it's mostly wishful thinking. The focus should really be on fundamentals, share count management, business direction, and proven revenue. Those are what truly move the needle long term. Now, after breaking down all of this, here's what I think. If management steps up, if they stop diluting, stabilize the share structure, and define one clear core business, there's a real chance to rebuild trust. Investors don't need perfection. They just need consistency and proof that progress is real. But if the pattern of silence continues, or if we see more dilution without explanation, then it's hard to imagine the stock holding steady, let alone recovering. That brings us to the most important part, transparency. In small-cap markets, communication is everything. Investors don't expect daily updates, but they do expect honesty and clarity. It's what separates companies that survive from those that fade away. YYAI still has time to control the narrative, but only if management takes action soon. And before I wrap up, I need to make one thing absolutely clear. This isn't financial advice. I'm not here to tell anyone to buy, sell, or hold. This video is for informational and educational purposes only. Stocks like YYAI can move fast, up or down, and they carry significant risk. Always do your own research, read official filings, and talk to a licensed financial advisor before making any investment decisions. At the end of the day, what happens next depends on how management communicates. If they step up and start showing real, verifiable progress, sentiment could shift quickly. But if silence continues, or if dilution ramps up again, then it's going to be a long road back. I'll keep watching this closely and update you as soon as something official drops. Until then, stay cautious, stay informed, and remember, in the stock market, hype fades fast, but fundamentals always tell the truth.